Hey guys, it's Stock Picks by Tim here, and in this video, I'm going to show you guys how to make money in a bear market, how to make money during a downtrend. And this is a strategy known as breakout trades. Maybe you feel like you're a little too much in the bullish position. Maybe you feel like short term the stock you're in is going to go down a little bit and you want to make some money. So I'm going to show you how to do that, and let me give you a few examples. Now, first off, I wanted to mention AMD. And if you guys are familiar with this one, you might remember back when it was trading in the mid hundreds. Now, when it had its pullback, it started finding support here at $100, and before its run up, it was finding support there at $100 previously. So this was a very strong support. And what happens when a very strong support gets broken? Well, it pushes to the downside, usually quite considerably. So typically, the stronger the support, once it's broken, the more likely it pushes down. And of course with AMD, we had that. Went all the way down to about 82 to 84, it started pushing back up. Of course, that $100 became a resistance, came back down and tested that level, became a new support. See that 82, 84 area became a new support, gave itself another little push. Could have been a great scalp from that breakout of 100 all the way up to about 102, 103. And then you can see it kind of went on a little bit of an uptrend, continued to break these previous highs. Each time it does this, this is good for a breakout. And what's happening now, we are breaking that $82 area, that previous support that we established after breaking 100. And you also have to be aware, you know, psychological numbers play a huge role, because we did break that 81, but it found support here at 80. Bounced, tested again, finally failed that $80 support along with the 82, 84, and just pushed farther down, all the way down to 77, 78. And these lines here were actually from a day before, but it would have been a great breakout. We broke that previous 76, 77, pushed all the way down to 75. Another psychological support. So if we come back around, test 75 and fail, it's very likely we come down, test 70, 73. You want to scalp it. You want to get in and get out on a day trade. You don't want to hold this long. And you would also want to get a sensitive option, meaning a lower time frame. It's going to be more sensitive to price action. And that's another reason you want to get in and get out. You don't want to hold on to a short-term option, whether it's a put or a call. This is literally just scalping, playing breakout trades. And here's another one that actually played out and now it came back up. And here's Amazon. If we break 102, very likely we come down to 100. Break 100, it's very likely we come down to the 90s. So for this one, I would definitely want to see it actually break 100 personally. Although you could get out right at about 102 all the way down to about 100. And then if it was to break 100, go in on another put, another breakout trade. You typically don't want to just continue to hold through hoping for the best. You want to get in and get out on those certain levels, you know. And if buying puts isn't your thing, you could always play this on a call. If we were to break out of 110 on Amazon, for example, it's very likely we push higher. And if we start approaching about 117, very likely we start pushing up to 120. Get in and get out. Scalp it at around 119, see if it breaks out that 120, scalp it again on the breakout of 120. But in this market, you know, you definitely can play the volatility, and day trading is definitely best when there's high volatility, when the stocks have a lot of potential moves. Now, one thing you also want to look out for is, of course, you know, if the overall market is falling or going against your position. You know, if you're about to play this breakout, but then the market starts recovering, it's very likely the breakout doesn't play out. Maybe it's just a false breakout. Also the RSI, you know, if you are just pushing down too quickly, very likely that breakout won't play out because you're already oversold. And the inverse is also true. If you're already pushing up very fast and you play the breakout to the upside, if you're already overbought, it's very likely that it's going to be a false breakout and you're not going to get enough out of it. It's not going to be worth it. So you definitely want to keep an eye on the RSI too. You want to see that you're in the neutral range as much as possible. Now I'll give you guys another example, and this one isn't as clear. Now this is on Nio. For Nio, I see it as a psychological number. If we were to break $20, I think it's very likely we fall further. Although, you know, when you look at Nio, we are in an uptrend, so there's no reason for me to expect this to just start turning around and downtrending. I do think that we will come back up and we will test this $24 area, possibly break out of 25, which could be great for a breakout. Although, you definitely want to consider yourself in the market. You know, are you just way too overextended to the bullish side? Maybe you want to consider some breakout trades to the downside. Now, I definitely want to recommend going in on a bunch of calls, playing a breakout trade to the upside if you already, you know, over leveraged and too bullish on a position. This is definitely a great way to make some short-term money in the opposite direction of your long-term goals, you know. But yeah, with Nio, if it were to break about 24, I would look for 25 personally. Very likely we push farther. And like I said, if we break 20, you know, not only the fact that it's a psychological number and we have previous relatively strong supports in this area and even recently here, but the fact that if we broke 20 by sometime next week, it would likely break this trend line, and this is another thing that technical traders would be looking for. You definitely want to weigh other things. You know, you've got psychological numbers, you've got trends that you can break out of, not just simple as support and resistance levels. So you definitely want to be aware of that. There are definitely many moving parts when you're trying to play a breakout trade. And of course, you definitely want to set a stop loss as well. If the trade goes against you, you can get kicked out. You don't have to sit there with that option, just losing value, you know, and you definitely want to stay unbiased. You don't want to hope that something turns around. If something's going against you, get out, cut your losses, and move on. Now, here's a great example, Tesla. If we break 625, 624, very likely we push farther, even come down and test the low 600 area, 610 or so. So this is definitely another potential breakout trade to the downside. And for me, you know, a breakout to the upside isn't very clear. You could try to break out of 750, but if this just runs too far too fast to that area, you definitely don't want to do that right now. You know, you want to see that stepping action, maybe over a couple of weeks we push our way and then break out of that. But let me know what you think about this strategy. How have you guys been playing the market short term? Let me know in the comments below. Thanks as always. Take it easy.